Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Chilean copper miners' unions called on Sunday for a re-evaluation of the operational continuity plans of the country's biggest miners during what they said was an alarming increase in coronavirus cases among workers. In a statement signed by the union leadership of state-owned Codelco, the Mines Federation, which groups the majority of workers for Chile's major copper mines, rejected the business-as-usual discourse advanced by miners and the mines minister, Baldo Procurica. The increase in cases is alarming and demonstrates that the preventive measures implemented with health and safety protocols aimed at self-care are not working and makes it evident that contrary to what the union believed, security and isolation measures have not immunized workers from contagion, the statement added. Chile has more than 170,000 cases and 3,300 deaths from COVID-19, the respiratory disease caused by the novel coronavirus, one of the highest rates of infection in the world per 100,000 inhabitants.
Moving on to the top news in the energy sector.
China's crude oil throughput in May rose 8.2% from a year earlier as independent refiners increased their processing to meet the recovery in fuel demand following the easing of coronavirus lockdowns. China processed 57.9 million tons of crude oil last month, equivalent to about 13.63 million barrels per day, BPD. Data from the National Bureau of Statistics, NBS, released on Monday showed that is the second highest volume ever on a tons basis, down from 58.51 million in December.
BP will write off up to $17.5 billion from the value of its assets after cutting its long-term oil and gas price forecasts, betting the COVID-19 crisis will cast a lasting chill on energy demand and accelerate a shift away from fossil fuels. Like its rivals, the British oil major is set to take a big hit to revenue from an unprecedented collapse in oil demand due to the pandemic. The impairments are set to raise its debt burden sharply and increase pressure to reduce its dividend. BP lowered its benchmark Brent oil price forecasts to an average of $55 a barrel until 2050, down by around 30% from previous assumptions of $70.
Up next we have the top agricultural news.
Global coffee stocks at the end of the 2020-21 October to Sept season are expected to grow to near 42 million 60-kilogram bags, the highest in 6 years, as production grows more than consumption, the United States Department of Agriculture (USDA) said on Friday. In its semi-annual report on coffee markets and trade, the USDA forecasts global coffee production will peak at a record of 176.1 million bags, up 9.1 million bags from 2019-20, mainly due to an all-time high output seen at 67.9 million bags in top exporter Brazil.
We will now take a look at some of the overnight price moves.
Oil prices fell on Monday as new coronavirus infections hit China, Japan and the United States, adding to concerns that a resurgence of the virus could hamper a recovery in fuel demand. Brent crude LCOC1 was down 15 cents, or 0.4%, at $38.58 a barrel by 0959 GMT. U.S. West Texas Intermediate crude CLC1 was down 49 cents, or 1.3%, at $35.77.
Copper prices slid on Monday with sentiment hit by concern about a second wave of the coronavirus and uncertainty about whether demand would recover swiftly or stay subdued for longer. Benchmark copper CMCU3 on the London Metal Exchange was down 1.1% at $5,722 a ton at 0958 GMT. Central bank stimulus had triggered buying last week, helping fuel a rise in the copper price to $5,928 a ton, a 35% rise since mid-March and the highest level since late January.
Next, we have updates on the financial market.
The dollar steadied on Monday and commodity currencies erased some losses as the risk-off sentiment which dominated overnight trading eased somewhat. Equity markets fell in early London trading, with many analysts citing fears of a second wave of COVID-19 infections. China reintroduced restrictions in some areas after Beijing reported its biggest cluster of new infections since February. Full story. In the United States, more than 25,000 new cases were reported on Saturday alone. Full story. Against a basket of currencies, the dollar rose overnight, gaining 0.4% between 0440 GMT and 0700 GMT equals USD. It then erased some gains, and was at 97.12 at 10:15 GMT.
We will now take a look at other significant economic news.
China's factories stepped up production for a second straight month in May, as the country shook off the economic torpor of the coronavirus, although the weaker-than-expected gains suggested the recovery remained fragile. Patchy data on Monday also showed sustained contractions in retail sales and investment, a sign many sectors were still struggling with the effects of heavy shutdowns across the world's second-largest economy earlier this year.
Analysts say signs of improvement continue to be seen in China, from increased steel production and car sales to more industrial parks restarting. However, concerns about a second wave of infections are now casting a dark cloud over recovery prospects. Full story. But a collapse in export orders amid global lockdowns has left factories more reliant on domestic demand, which is recovering at a more sluggish pace. Retail sales fell for a fourth straight month. While the 2.8% drop was smaller than the 7.5% slump in April, it was larger than the 2.0% fall tipped by analysts. Heavy job losses and fears of a second infection wave have kept consumers cautious.
That is all for this week's news. Stay tuned to TradeFlow TV as we continue to provide daily updates on the commodity market.
This communication has been sent to you by TradeFlow Capital. This communication has been prepared for the information of TradeFlow's clients and is not directed at retail clients or those in a jurisdiction in which this distribution may be restricted by local regulation or law. The pricing contained within this communication is indicative only. It neither intends to express the terms of any contract, financial product or transaction, nor does it aim to notify you of any possible risks in undertaking such a transaction. This communication should not be construed as an investment or trading recommendation, nor is it intended to be an offer to buy or sell any transaction, securities or investment. OTC derivatives typically involve a high degree of risk and are not necessarily suitable for everyone. As the circumstances of each person differ, you should not rely on this document to make an investment decision and should seek your own independent advice. The views expressed are those of TradeFlow at the time this communication was prepared and are subject to change without notice. Information on past performance is no guarantee of future performance. Forward-looking statements may be based on our opinions or projections, and actual results could therefore differ materially. This communication is a marketing material. It has not been prepared in accordance with the legal requirements designed to promote the independence of investment research and is not subject to any prohibition on dealing ahead of dissemination of investment research. This communication has been prepared in accordance with the FCA rules relating to financial promotions. However, TradeFlow give no warranty in respect of the accuracy of this information and accept no liability for any loss howsoever arising as a result of a person acting on this information. The content of this communication is confidential and for the intended recipient only and should not be copied, distributed or disclosed in whole or part without TradeFlow's prior consent. If you no longer wish to receive these communications, please contact the sender of this report with your request to be removed from TradeFlow's mailing list.